Hey, everybody. Welcome back. Thank you for taking the time to join me with this GameStop Daily DD, in which we will discuss our options chain, borrow rate, shares available, IV, and of course, our daily technical analysis. So kick back, relax, and enjoy. We're down 3.7% today, a drastic pullback, but it's to be expected. It's something that we've discussed in our previous videos, and getting the reversal signal of our EMAs, or I guess simple moving averages in this case, with the key level breakout, and now we are looking for a trend retest, right? So we're right in that area, right? On that note, yesterday we were looking at the charts of old where we had the RSI kind of peak above the 70 and then go below and then hold trend, right? And then we displaced up higher post pullback. So right now, again, expecting the pullback. There's nothing wrong with this. It's very, very healthy, in fact. And as long as we can maintain support levels, we're going to be good to go. Now, technically speaking, there's multiple support levels in addition to now our options chain, which is loaded with them as well. So again, not worrisome this pullback at all. It's to be expected. And now we want to see, if maybe our RSI can bounce back up here and we can hold this trend line, for more conviction as to what the future brings. With that being said, things are looking pretty grim, right? We are on a major pullback. Momentum is accelerating downwards, which is obviously not great. The market in general is experiencing a bit of a pullback here, right? With SPX. So just trending with it as expected. There's nothing really we can do there. Did you notice ever that whenever GameStop's about to break out, the entire market does a massive pullback? The timing on these things is crazy. I got to get my tinfoil out for that one. But just an observation. And I was actually joking with a friend earlier on in the week. I was like, well, the market's pretty high. It looks like GameStop's ready to run. It should crash and stop us. And they're like, oh, don't even. But here we are. So, yeah, not really too much going on here. We do have the warrants ex-dividend date coming up midweek here for us. It's the 25th of Thursday, so tomorrow's Friday, last day of trading. What a golden opportunity to potentially load up on some shares, if you will, or some cheap contracts for what is a unique corporate event. This catalyst is not something that we're getting in the past a lot. We may not be subject to receive it in the future a ton. So I typically don't recommend option lottos, but maybe we can go through a couple of those and make some recommendations as to what would be appropriate and not appropriate for those of you interested. And again, mostly discussing what I'll be doing myself. I'm never going to make you a recommendation ever because I don't care. I mean, that's the truth of it, right? So this is mostly my plan always, and just sharing that for you. And the big reason I'm doing this is because I have so many family and friends who have got into this trade, and to update them each individually takes my entire day, right? When something happens. So if I'm doing this, then I can all just send them here. They get to stay updated with all my thoughts and concerns, right? So just keeping everyone in the trade informed, and if you're here by happenstance, welcome. We're happy to have you along as well. So that ex-dividend is next Friday. So all of your shares need to be bought by next Thursday. That includes any option contracts that you want those warrants tied to. Now, we're going to talk about that a little bit as well. I don't know if I recommend that because the liquidity is really going to dry up on those. However, if the price moves up and they are in the money, then that's a self-correcting problem. We're gonna have to see how that plays out, right? I like to kind of think of both sides of it and then watch it play out to determine which one's right. So Aside from all this, momentum increasing to the downside, we have the market pulling back as a whole. We have, technically speaking, room to the downside for a healthy pullback for our technical setup, our EMA reversal, trend retest, and go. Still looking to fill the upper band of the gap once we do, right? On balance, volume is chilling, pulling back a little bit, but you would expect people to take some profits off the consequent encroachment, which is, of course, the 50% mark of the gap, right? We've got this 1 day gap started from the bond offering way back Wednesdays. And this is a inefficiency in liquidity, which gives us a draw towards that center point and often even filling it if we can break past the center. And again, I do think we'll accomplish that because the options chain, the corporate catalyst, and again, the technical setup. So there's a couple things stacking here in our favor that I like. We have our PMO, really diverging downwards here, which isn't great, but the further down we get, the further up we'll go. And at the end of the day, I like volatility, that's where a lot of opportunity is created, specifically with the options contracts, right? The shares, you're flipping these for 10, 15%. Not a lot's happening there, but some of these option contracts with that volatility go hundreds of percent, right? So that is really what I personally like to do, and then just accumulate those shares. Of course, this isn't really to do with any of our technical analysis. Looking at my own charts really quick here, because we do them both. We can check out our daily volume. Don't mind these. They're not for you. LOL. Whoops. Okay. So our daily volume on GameStop is 7.96 million. So we're up from yesterday's 5.5. And our average is down a little bit still because we're turning lower at 9.13 now. So still really nothing here. Let's wait and see how the volume comes in next week, right? Because Friday is the big day, and then it's only like another week until the 7th. Not even 7th to Tuesday because it's a weekend. Ooh wee, these things happen quickly here. So very exciting times coming up. I'm really interested in all of this. Super excited. Maybe we do some live streams as well. 100 likes on the video. I'll start live streaming next week. That could be fun. And I'm always on live anyways. Don't tell anyone, but I'm on Twitch way too much. Doing live trading as well. All my yelling, my video content creation is all happening live. Hello. Come say hi. And so yeah, anyways, volume needs to pick up. We have our reversal signal. We have our market structure shift, creating a bullish order block right now. As long as we can respect that, we are good to go. Now, this is my last line of resistance, right? We have our bottom upwards trend, right? Support line. And with said market structure shift on the recent reversal, creating the order block, we now have, this as our last bastion of resistance, which I don't think we're going to challenge because of how bullish everything else is. Just technically speaking, I would love to see if the price doesn't grab on one of the exponential moving averages here. I have 21 in teal and the 50 in navy blue. If the price doesn't get caught there, if it doesn't get caught in this bullish breaker block in olive, then I would expect a retest of the order block of the trend, the bottom trend, to bounce up, right? If we don't get that, then, GameStop's cooked. It's all over. Pack it up, right? Just technically speaking, that would be true. However, we all know about the company's fundamentals. We know about the corporate catalyst and the options chain, and it's just that basically invalidates that. However, if anyone was unaware of all that, that's how they're looking at this, right? Which is good, again, to be aware of that side. And now we've mapped this out, right? Our pullback support zone, where it kind of starts at the 21 and it goes down to the lower band of the gap, and we did have that little gap up as well, right? So will it test this gap up? I don't think so. I honestly don't think so. Again, because of how bullish it is. And when something is bullish, the pullbacks get bought up right away, so they're not as extreme because everybody knows it's bullish, right? So I expect that this pullback gets bought up quite quickly, maybe even by the end of the week, which I guess is tomorrow. But by next week, I would be certain. If not, holy, have I been wrong about some things? Which again is possible. We'll have to reassess at that point and move forward. These things happen. With that being said, we did kind of expect this. We were talking about it in the last few videos. We have our reversal, we have our key level breakout. Now we just want to retest that trend and go. A good example of this. I mean, it happens all the time, right? Reversal signal, key level breakout, and it kind of popped all by itself, but then we have a trend retest, right, where it comes back to the 50, and then it goes. We can see this multiple times. We're not going to have a key level breakout here because we're already above the 200. So you'd use as your key level, right, because you do need still to pair it with something, right? You can have a market structure shift, right? I think your market structure shift would actually be here. And then this would be a break of structure. Either way, both of these areas would be post reversal signal paired with a key level breakout, right, which is happening really in quick succession because you had to wait for the reversal signal, in a nice run. Again, here is your reversal. This is a little different though because we had this gap here. So, you could treat this as your level, your key level breakout, because this is an inefficiency in liquidity. You could also do like a fib retracement on it, I guess, and use the 50% mark, right, as your key level, potentially. They're very close to one another, but again, reversal signal, key level breakout, trend retest, right, and go. Here, trend retest didn't really happen. It kind of did, but it was so strong, it didn't go, and then held trend really nicely. Again, I see that this is what I play as one of my main setups daily on all other stocks. Reversal signal. You don't really have a key level breakout here. It's like a false breakout. Here you do trend retest, breakout. I mean, kind of cherry picking that a little bit. GameStop's just so messy to trade. I mean, I could cherry pick other examples, but that's typically the setup and how I play it. So I would imagine that this will continue to play out for us, right? If not, it's invalidated, and like I said, we would then be aiming for the bottom trend with the order block. But because of how bullish things are, I don't think so. Post exercise of the warrants, which would be dilution, sure, let's come back to the bottom trend and chill out here a bit. But right now, before all the delivery has been made whole, I don't think so. I don't think it's done yet. We're going to have to wait and see. So there's our technical breakdown for the day. Getting into our options chain here, Max Payne is moving up from 25.5 to 26. Put call ratio on the entire chain is still chilling just below 0.60. And then extremely bullish on the week, and moving out as well for the monthlies on October, looking really, really good. So getting into it on the 26th, Max Payne 26, and October 3rd, Max Payne 25, October 10th to 24th, around 24, 25, and then October 31st, 24.5. As we just looked at in the last slide there, the spots sit a touch below the nearest Max Payne, maybe 3%. So natural pin is probably towards 25, 26 on this Friday, tomorrow, or Monday. Again, could be potentially a lot of buying pressure that blows that out of the water. Um, Unfortunately, it's another week come and gone. The 30s are roasted. There's 26,000 30s here. That's just so sad. Uh, it goes to show the importance of building that ramp in the money and not aiming for the target, but building the ramp so you can hit the target once you jump off of it, right? Just to say, oh, we're filling the gap at 28 and it can go above the gap, so I'm targeting 30. That might be great if you sold at 27 earlier on in the week. But, if you stuck to your plan and you didn't pull the ripcord immediately, you got wrecked. You got absolutely cooked. And this is the third week in a row that's happened on those 30s, right? So, not just that, the 29s, the 28s, and I know we've dropped down substantially. We were at 27.5 earlier, with that market pulling against us, the S&P 500, right? So, the 26s seem like they're probably going to be safe. The 27s, I would really love to get these in the money to close out the week, just for additional settlement delivery next week, as it's a big week, right? So every strike counts. The 26, 26.50s, 27s, 27.50s. I'm going to write the 28s off. I don't think so. If these are in the, we'll throw a little bit of a party tomorrow if those are in the money. Hell, even if the 27s are in the money, we should be throwing a party, honestly. So that's kind of what we're looking for there. And, it is what it is. So, unfortunately, the cheaper contracts have a higher risk to expire worthless. If things do go, they have a higher reward as well. However, it's about consistency. It's about growing that stack. And if you want to take some riskier plays with a percentage of the portfolio, a percentage of your options allocation, sure. But should you be just buy all 30? Oh my gosh, that's so sad. These 25s, however, looking pretty good. A lot of support here, and that's what makes me think that we're probably not going to fall too far back because of how much support still is on the chain for us. For these coming weeks, specifically next week, the big week, right? I don't really know. I do not really know. The call stacked 25, 26, 27, 30, right? 30 wall being the standout, which I would assume gets cooked, right? Next week, if these 30s go in the money, that's fantastic. And, that's the overall narrative here on the options chain is the $30 strike is so prominent that it acts as a massive wall. However, if there's some thing that gets us above 30, it's going to force a massive dealer hedge, which should throw us up further. And that's kind of like the kickoff of the ramp. But we need something, whether it's the warrants, them doing the locates and delivering those. Cost to borrow is not even up yet, but maybe come the third, it does start to go up. And even, it doesn't all have to happen by the 7th. We might be pushed into November and, maybe even potentially December for things to get really spicy. But we need to see that start to build. We need to continue monitoring the options to see, if we have support. Just like we monitor the technicals day to day, as to we will continue to do so on the options. Anyways, support here, right? And that's kind of what we're looking for, but also some potential resistance. However, it's not just the warrants that could push us up. We could have maybe a social media catalyst. We could have potentially the short arbitrage begin to unwind as well. So there's a few different layers here for us. Moving out to the 17th. I mean, this is kind of a nonchalant week here. There's not much to even mention or talk about. So I'm already doing too much rambling. A lot of 25s, right? A lot of 25 puts today, but that's, I think generally outweighed. This is the 17th, right? Yeah. This is the big one, right? So this is the OPEX massive call, open interest, 25 to 30, 35 to 40, even kind of showing up here a little bit. But puts are densest, a little bit lower, 22. all the way up to 25-ish, right? And then they kind of start to taper down, other than this massive spike at 30, which, I guess are good. Those are technically in the money puts, just how we would have $20 calls, for example, right? Um, so max pain at 24 still, which is a little bit lower than we'd like to have it. Again, I think this is going to trend up as we do approach the expiry date. Baseline is going to stay lower, mid 20s, unless a catalyst forces us to chase, like we kind of talked about before. And again, I think that a lot of this chain might reappear week by week as we get closer, right? Moving out from this, and that's going to be their main goal again, is to every single week not have these 30s be in the money, right? So it's our goal to have something swing us through that 30, and then they have to surprise hedge when they were, expecting not to have, right? The 24th, not really much happening here either. Specifically today, a lot of out of the money stuff going on here, which is irrelevant. It's a very light week as well. The 31st, again, there's not really anything happening here, but it's starting to build up. November 21st, so actually getting a little bit further out, but it's just nothing here. It's so light. There's still just this one block at 30. Not really enough volume to really look at it yet. And again, this is subject to build out as we do get closer. Some 30s today for the 26th, which is nice. We've seen these 20s kind of bleed off recently. Looks like they're coming back maybe slowly or continuing to bleed off. I think coming back, actually, it looks like, because I think we went down below 30 and now we're at 32. So someone's buying the dip, right? And also sold the top, which, you wouldn't expect these to have changed that much, but I'm sure it counts. And maybe that's just their risk, profile that they're managing. Moving out, I don't really see anything here. Nothing to really get our attention. No massive blocks. Very, very light. A little bit, but really, really nothing. So it's quiet, right? Everybody's getting their contracts bled down. That's fine. I know a lot of people are holding contracts right now for the warrants. So it's expected that they get pushed down. Honestly, it is what it is. On that note, borrow rate remains the same. Shares are still chilling. So why hasn't this changed? I don't know. Maybe people just don't care to recall their shares. That could be. And at the end of the day, I don't think it necessarily matters on the individual. I don't think the collective really needs to do anything. I feel that this has been financially engineered in such a way that everything is already as it should be. And even just the forced delivery of all this on institutional individuals, the insiders and the computer share folk. So, I don't think Ryan's a doofus, and I don't think he would leave it up to the will of a doofus, right? No disrespect. There's a lot of Robinhood users still out there. So, I don't think it matters what they do. I think the things are going to be locked down on the back end ahead of time. Price down, IV up. Interesting, right? So that's good to see. People starting to kind of attack those further out strikes as they anticipate, a move, right? So that's kind of interesting. We're just like they say, subdued IV. Hopefully, once the new chain comes out on the 3rd, we start to break up, and that can really help anyone's contracts who still have them and have been hurting today, right? So, and again, I think that's due to the fact that the old chain will suffer from liquidity degradation, and specifically as it goes on, and there's going to be no buyers for the old chain unless the short players somehow need those contracts for the warrants. But I also kind of doubt that. Um, and you got to have a nice buyer to get a good fill, or your spreads wide, and that's going to be really hard on your out of the money options. On the ones in the money, that's going to be self-correcting, so that's not a problem. IV up, bull rate the same, GameStop down. That's our day. If there's anything I've missed, please don't hesitate. Let me know in the comments what I can incorporate. It's been my pleasure. Again, a little bit of a downer, but the market as a whole was down quite a bit as well. So, to be expected. I do think that the market has found its bottom potentially today on the 1-day 21 moving average. If not, we're close. You can see how unlikely it is that we break down to the 50 on the 1-day. However, if we do, there is a nice gap here to potentially catch us. And, we'll take it as it comes. The market is very high. It's super extended. And maybe it does pull back more, and that could hurt GameStop along our way. But we don't really know. We're going to have to take it as it comes. And, on that note, for the opposite side of the argument is, well, the market's been so strong. Why would it stop now? We've got a retracement. Let's leg up again. So the opposite school of thought exists as well. Always. Don't just focus in on your biases, of course. So I hope you enjoyed. Leave a like, drop a comment, subscribe to the channel. Kick back, relax, enjoy the rest of your day, and I'll see you soon in the next.